The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And we go into yet another day of expiration. And saw a little weakness in the morning. I was not surprised about that. Up a little higher than I probably thought earlier this morning, but not near as high. I thought we'd get probably down to the area we did at 2085, and it's pretty much working out. The problem is I just couldn't find a lot of expiration moves that look like they were good bets. So pretty much sitting on my hands. I will be adding a position in the daily newsletter at the close today. I think I will anyway, unless something drastically changes. So there is some interesting stuff happening out here, but I have a feeling that the next position I will be in will be at the close of the market today for my daily newsletter. I actually added one new position long in the Tech Insider this morning, and kind of news driven, but I've been waiting to buy a stock for a long time. And it came back to the point where I wanted it to get. And I don't think that there's a great deal of upside in the general markets and individual stocks. There may be some decent upside, but I do digress. And we'll be back in that a little bit. But as we start the show, as most days, we're up 9-10 points on the S&P cash. That's with just a hair under 2 billion shares. So volume is incredibly light. And of course, all you have to do is look at the VIX to figure out that the market continues to discount any volatility. We're back under 15 on the VIX at 1490 on the last tick I have. And yeah, Dipster's popping a champagne once again out here. But we'll see what next week brings. This incredibly light volume is not what you want to see new highs on, but it is expiration day, so I'm going to give it a day or two. I think that there's a high probability that we have a fairly decent breakout of these highs, and it will be a false breakout. But we'll have to wait until we count up the volume. But I think we could have significantly higher highs in the very near future, and that's based on stocks that have guided down, continue to guide it down, missed earnings, and yet are being bought with both hands all over again. And that's why I got out of my short positions last week, and or this week, last week. Boy, tell you what, these weeks are all kind of just smearing together. Anyway, I was pretty sure that there wasn't going to be just a tick up here, and the market was going to roll back down. So I got out of my short positions, and it is one of those things where it looks to me like there's probably a 70-80% chance we're going to have some kind of extensive higher move, maybe 2150, maybe 2170. I'm hoping that we get some kind of intraday spike that reverses 50, 60 points or something and gives a clear indication that a top is in. But I could be wrong. We could, and I have seen 3-4 weeks of zero volume, of vapor volume up moves in this market. Mostly they were in August, and just a lot of people short, nobody wanting to sell, not a lot of people wanting to buy other than those people that are already short. And I suspect a lot of people are seeing what I'm seeing, which is earnings per share dip as prices go up. And the companies themselves, CEOs leaving, a lot of stuff tells you that things are not getting better. What it does tell you is there is a great deal of money chasing a handful of stocks. Most of those stocks are in the indexes. By buying one of the indexes, of course, you're moving all of them up, and whether there's volume or not, you can see that continue for a while. But I could see that we get some kind of peak or spot or blip or rogue wave or whatever you want to call it of a short move higher out here. If volume comes in, then maybe we are going to have a replay of 1999. I've had a lot of people, or seen a lot of people discuss valuations, of course, in these IPOs that have yet to even come out. 15, 20, $40 billion IPOs they would be as they come out the door. And people are buying and trying to get in on the bottom floor of these startups that have not even come to market yet, driving them up. And that is always worrisome. It seems like the only decent place out there are waiting for stocks to fail and maybe someone come in and turn them around later on. Just doesn't seem, maybe you get lucky with a Facebook and it gets clubbed because of the bad IPO and you're able to buy it at $20. But for the most part, these stocks are starting at high levels and going to higher levels like GoPro. And we've got a whole bunch of more stocks last night. We'll get into, I think, today that have cratered back down that are recent IPOs. Wall Street's business is pushing paper out and financing business. It's not making you a lot of cash. And as I've always said, if a company can't figure out a way to make money before they go public, 90% chance they're going to go out. For every Facebook that's figured out how to make money in mobile, there are going to be 9 other companies that come out that say they're going to figure out how to make money in mobile, and they won't. And that's probably a good ratio. About 1 to 10 is probably going to make it. And I see a lot of them that are looking rather weak. I think Tom brought up rocket fuel last night on his show, but Noodles, which was another, basically they were selling Noodles when it came out. We'll look that up later on, but they were looking or pushing Noodles out as the next big. I've got Green Mountain Coffee Roasters on my mind, and I should have what is that? CMG. I can't even think of the name of it right now. Can we look at Facebook? Yeah, we can look at Facebook. I think Facebook has some issues. We'll get into some charts here in a minute. I wanted to go through and get the start of the show out of the way. And as always, we like to start off the show with a little bit of history.
Then it's all just a little bit of history repeating.
That is right. And on this day in 1961 and 1852 and 1848, it was giant days for the stock market and trains. Mr. Choo Choo, the railroads, highways of steel. Kind of a little bit before my time. I always liked the image of the guy with the stick, with the polka dotted handkerchief, with all his worldly goods in it, out going to catch a railroad train. But anyway, on this day in 1961, the New York Stock Exchange delists 5 stocks all in one day. They are all railroad sugar companies based in Cuba, and their assets have been expropriated by Mr. Kami Pinko himself, Mr. Fidel Castro, and of course, killer of, well, he's probably had his hand in killing at least 20 or 30,000 of his own people, and probably a couple 100,000 people in Africa as a puppet of Russia. But what else can you say? 109 years before that, in 1852, Michigan Southern Railroad puffs into Chicago, connecting the breadbasket of the world directly with the eastern United States for the first time. A 2-week journey suddenly becomes 2 days. And that's if you were on the Pony Express, it was 2 weeks. Most of the time, it was a lot longer than that. But at that point, we really started to see huge moves in the north because all that corn and wheat and cattle could easily make it from where it was being produced in the Midwest to the Eastern Seaboard, and changed a lot of other stuff. In 1848, probably the biggest man of Wall Street ever was Edward Harriman. He was born in Hempstead, New York on this day. His mother bore him on this day in 1848. But he was one of the biggest traders ever, and I'm actually about 3/4 of the way through that Harriman book. I'll go grab it during the break, and show it to you. I think I brought it up 6 weeks ago. I haven't got about halfway through it and got sidetracked on something else, but I'm back in. Was reading a bit more of it last night. But probably the biggest food fight on Wall Street, and he was certainly part of it. But born this day in 1848, and the biggest man probably ever as a percentage of the market on this day. But I do digress. Anyway, I had a lot of CEOs leaving, a bunch of other stuff happening. I'll get my chart up. I didn't have it, so we got to get it up. Can we look at Facebook? Yes, we can. Facebook looks to me like a lot of what they've been talking about has been built in. It's headed back up. Some decent volume yesterday. Going to hit probably $82 again, and we're going to see what the volume is. Going to have to get through 81.16 though, with some decent volume. You basically came down on 106 million shares after that October 28th high that day. You're basically even looking at 74 million shares. So what do we have lately? 45 million shares yesterday, which was fairly decent volume day. 26 million shares today. Just looks like we're getting very close to these highs. But I'm seeing so many of these stocks out here hit triples. My guess is that a lot of these things are going to break out, and they're probably going to break out on light volume and come back into the trading range. If they come out on big volume, then I'll buy the retracement. If they come out on short volume, I'll try to short them. But at this point, there's not a great deal. Let's see if we can get anything else out here. It's not horribly bearish, and I think there are much better shorts out there than Facebook. But we're seeing a lot of stocks that continue to guide down and or act very poor after earnings, and they're going right back. Probably nothing more than Tesla. Tesla basically saying that it's going to be a couple more years before they ever make any money. 2022, they came out and said that we're going to have to spend a lot more money to build a factory. They said a whole bunch of stuff. And guess what? Mr. Market said, we don't care. We are so desperate to find some place to make some money that we're going to look 7 years down the road before the stock price could ever catch up to the actual earnings. And by then, will it be 20 or 30 years down the line? Anyway, betting on the come is the trade du jour. And, we've got a fairly strong down day to 19 one at 93.28. I was short this in the Tech Insider. We took our money the day before earnings and made some very small money on it. But I really disliked the way that this thing was being pushed around the day before earnings. That's why I got out. I smelled a rat, and I still smell it. But we will talk about this more when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, a very interesting day out here. Of course, when we look at the stocks that are moving out here as any kind of real consequences, of course, the only thing I really see that's truly moving is a lot of these, how can I say it, development, well drilling, what can you say else other than that? Wells, drilling, development, exploration companies. I guess that's probably the best way to describe them. About 1 o'clock, the well numbers came out. They were probably not as bad as a lot of people thought, but as a sector out here, pretty much what's moving. Continental Resources off 2%, Conchito Resources off 1.6%, EOG Resources off another 3%, Newfield Exploration off another, it's almost off 3%. We'll look at those in the charts later. Got a question in the den about what about PAWN? PANW. I don't know what they're asking other than it's a Palo Alto Networks that this thing is on a tear, and of course it is the darling of Wall Street fund managers. They just keep moving it up every day. I don't think there's anything else to say other than that. They all decided they were going to buy it, and every day they come in buying yet another handful of it. And I guess because it is the darling of Wall Street, because people understand what it does. We've seen CyberArk move very strongly, and even FireEye lately. Those are starting to catch up with Palo Alto. Part of Palo Alto's allure for fund managers is that those funds are probably run by companies that push Palo Alto out the door. And my guess is that they want to drive this thing up and absorb a lot of stock, probably well in advance of the other ones. So my guess is this one's probably going to outperform in the very near term, but the other three are probably going to bring up the slack. But no sign that this thing has fallen. I dislike that you got 4 dojis in a row up here and a move up here. I would really be concerned on any gap down that this thing has finally broken. But 1, 2, 3, 4, 4 dojis out here, and then a move up on fairly light volume. Your support level on this thing's going to be right back around 120, 125. And, you know, if you could get back down to that level on light volume, it could be a very nice buy. But my guess is that this thing's probably ready for the B2C leg more than it is continuing higher. But again, I think probably some money out of this is coming out. But part of this was just how much of a big deal this was on Wall Street. And they're going to, you know, basically distribution is getting a stock up to real big highs and then trying to sell it off to people who think they are getting a bargain on any pullback. And I think we're probably going to get ready for a lot of distribution because this thing was spread out all over Wall Street when it came out. My guess is we're getting very close to the point where these guys are wanting to get their cash back out of it. So great company. Said a wonderful, giant ABC from May 15th to October 3rd, and then October 13th to today. And I don't know what else you can say about it other than maybe a little bit less energy coming up here. But I could see them trying to distribute this in mass to the public. Doesn't mean that it's going to fall apart. Just that a lot of these guys bought this thing at the IPO at a hugely discounted level when it came out, and it opened up. If I remember right, it came out at 25 or 28 bucks, opened at 50 or close to it, a little over, and you know, it had a little time coming back, but they're getting their money out of this thing, and I think it could go sideways for a while. I think the other stocks seem to probably be a better bet in this sector. This is probably set up for some distribution. If you want to think of this as the SSYS of the 3D printing stocks, I think you could. This is the one that everybody has to own on Wall Street. And of course, when everybody owns it, it's a great time to be selling it. And a lot of these Wall Street firms were knee deep in this thing. They've got it up at highs. It's not that it's a bad company. It's just that the old saying of sell when you can, not when you have to. This is exactly what they're going to get up here, get the stock up, get a lot of it out there. Now, maybe the earnings continue, but they will sell when they can, not when they have to. Look for consolidation and distribution in the stock in the near future. We will be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. nadex.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And another question in the den is my thoughts on cybersecurity in general. And that is, if you're going to have a bull market, the first thing to do is advertise it. Normally, when you see something like Palo Alto run like it has, that is the advertisement for a long-term bull market in it. It's not uncommon to see a stock like this take off and blow through all kinds of highs, then for it to kind of come back down to earth over a few months and the reality start to catch up. I suspect that's probably what we're going to see in this. We've had some fairly decent moves in these companies, and they're probably, the quick money is in there. Now the Wall Street firms are going to see that those things have been moving, and they're going to wait for them to pull back a little bit and slowly buy them up for maybe across the next few months or even across the summer. And my guess is that you see probably another big move just like this come next fall. Once all the big guys are in something other than all piled into one stock like Palo Alto. But if you look at the 3D stocks, very good example. Everybody was piled into SYYS, where the retail investors were in all the rest of the 3D stocks. And if you look at them, they broke, what, a good 6 months before SSYS. And you're probably going to see the same thing. Everybody's piled into Palo Alto. You're probably not going to get big retracements and big moves up in it. but you're probably going to see a decent return in them. But I can't buy anything like this without a fairly decent retracement. Every time I've done that, the music stopped and I've been left holding the bag of probably less than ideal poop. And that's been it.
Alan! 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 Alan!
Anyway, the Alan Almeister is in the production studio at the moment. So I thought I'd send him a shout out. But I do digress. There was a good question in my inbox last night, and I'm going to answer it on the air just because it would take me an hour or 2 hours to write a very good explanation that I can probably do off my hand, especially Expiration Day where they're probably not doing a lot of stuff. But let's check back in with it, and then I'm going to get into this. Let's just take a quick look. Okay, dollar index down 25 cents, still at 94.16. It was it tried to get higher and they started shooting it down again. S&P's up 2.12 billion shares, so very light volume again at higher highs. We got to let me update this just to make sure. Yeah, 2107. Anyway, had a good question in the den, and basically Ron is asking about is there a great software platform for doing studies for backtesting trading theories? And my answer is probably no, and I'll give you a handful of reasons. But my experience has been, one, no one that would write software correctly or would write software correctly to backtest studies would probably ever be long-term successful. There are a few things that I've seen people backtest, and they almost always fall into the same kind of problems, and the software they sell compounds those problems because, of course, who'd want to buy a piece of software that told everybody that their ideas were crap? But that's probably the reality of it. There are a few cognitive, the psychologists call it, dissonantive and cognitive errors that people make, especially in doing statistics. And of course, this morning, or what was it, last night, we saw the government come out and go, you know how we told you eggs are horrible for you? Well, we made a mistake. And of course, before then it was saccharin, before then it was that, now it's global warming. There are always a lot of people that are just so darn sure of their statistics. But after time and a lot of effort, you find out that they made a huge whopping error. Actually, I wrote about that in today's Tech Insider. The one I was writing about is Deflategate. And we had two very, very smart scientists weigh in on Deflategate, and they were both miserably wrong. One apologized for it and was wrong a second time, even in its apology. But what can I say is that there's about 50 or 60 major errors that you can make in using statistics. And all the software I've seen out there to backtest software does and has a few of these. There is a great way to test it. I write my own software, so I can't tell you if there's anybody else out there that totally does it. My guess would be something like Mathematica, which is a math program for mathematicians. There is also a language called R that is directly addressed to statisticians. I use a project from Microsoft that's freely available to run my software on, and it is nothing but a statistical engine. But garbage in and is garbage out, and there's 1,000 ways to go wrong and only one way to be right. And most of the time, people find things that confirm their beliefs already, and that's it. But I can tell you that the biggest problems people have with trying to make a trading system, and that is, one, they curve fit. They make the data from the past fit the future, and that almost always doesn't work. Most of these software companies that do sell software test the software backwards, i.e. from yesterday to the day before, last week, last month, last year. The only way to truly test software is to test it in forward motion, because you don't get the data backwards. You only get the data forwards. So if you're actually talking about a trading system, it's got to start from the oldest date and go to the newest date. The telltale spot of a curve-fitting piece of software for trading is that it goes backwards. And that's an easy way of figuring out and curve fitting. So you want to make sure that that's true. I just write individual software tasks to go out there and try as many things as possible, and then I try to break it. Probably one of the best ideas out there from science comes from a man named Popper. He basically said that any good theory is going to have a lot of ways to falsify it. I've got a list somewhere of 60 different biases, confirmation bias. In fact, that is what I'm attributing the problem with the Deflategate. There were two guys. They wanted to confirm what they believed because it was going to mean a lot of free advertising to them. They were going to get their names in the paper. My guess is if they said that it was perfectly going to be fine, that there was no environmental reasons for the balls to lose pressure, it would have never hit the paper. Of course, coming out and having two famous scientists say that it did guaranteed their names in the paper. So there's a lot of reasons for people to make huge mistakes in science, and you can go through a litany of them, and there's hundreds of millions of people that are dead because scientists have made errors in the past. I make errors all the time. The problem is that most people that start with a software have no idea statistically how they can make all the wrong turns for all the wrong reasons. And that's why you don't see some kind of piece of software that money just falls out of the disk drives. And probably the best way to explain it is this, and why I hate models for the most part, even though I use them. The problem with models is you don't know what you don't know. And why I think you can basically think of the stock market as a snowflake. Everybody says every snowflake is unique, and no one's really tested that theory. But you can probably make an educated guess that there are more ways to put a snowflake together than all the atoms in the universe. So pretty big number, right? And there are 35 main types of snowflakes. There are 135 types of snowflakes below those 135. But when you get down to it, you can put them together. You can classify them in major sectors, which is what most people do. There's actually 2.5 million hands in poker. How do people ever figure out what to do in poker and become professional poker players? Basically, they get and put in like poker hands into a bin, and they finally figure out over time that my odds are roughly 82 or 82% that I'm going to win this hand or something. They don't have to know exactly. Maybe it's 80 to 85%. But they will figure out over time. And that is, a lot of people put a lot of stock into something they know nothing about. My guess and my answer on this would be, first, get a good book on statistics, then get a good book on cognitive errors in statistics so that you know how you're messing up. But one of the best quotes that was from a mathematician, and no one knows apparently who it was, the original one. A lot of people have laid claim to it, but no one can prove who said it first, and that was, numbers are like people. Torture them long enough and they will tell you anything you want. And one of my big heroes, probably the biggest scientist of last century besides Einstein, he's more theoretical. Actual scientist basically said the problem with computers are that you can play with them. Eventually you can get them to say anything you want them to say, and that is the problem. As you're putting these in, you're going to put in huge amounts of bias from yourself. You almost need somebody else to always be devil's advocate on the other side. What I can tell you is that all these things in every model I've ever seen eventually creep in for the reasons I mentioned, and probably the one that is the biggest is you don't know what you don't know. There's always going to be something slightly different. I think the Indians have 15 different words for snow, or did, and that was whether the snow was heavy or light or wet or dry or a lot of stuff. So you can categorize them. Unfortunately, there's always they're just slightly different. They act slightly different. And just when you think you have every possible combination of the stock market figured out, they will come up with something else. And that's just the way markets work. If everybody knew how they worked, they'd all do the same thing and no one would get a dime out of it. So be very careful. Stock markets are very good at finding yet another way around human behavior. And hopefully that answers that question. Get busy. Learn to program in R, which is a statistical language, or get something like Mathematica. And I think that's it. Hopefully that's it. I would, the next thing even before I do that, I would read Fooled by Randomness by Nassim Taleb to really figure out that your models will break about 1/4 of the time. And you need to know that up front. Anyway, I'm going to go look at some stocks here. Almost ran out of time talking about that stuff. Really haven't got to a lot of stocks, but we'll see if we can get to a lot of them. I was saying I wanted to see how these stocks started working and when they started hitting highs like Adobe. I think we talked about this yesterday. It is yet another little bit higher. It's going up against the December 12th gap up with 12 million shares. At $77.56. Of course, yesterday we had 1.5 million shares. Today, 1 million shares. So more than a few of these stocks up there hitting highs. Big lots up here at a gap. I'm kind of watching this one closely. Very light volume. Last time it was up into this gap was January 28th. It happened on 1.1 million shares. 400,000 shares yesterday. 238. Not a lot of volume as these things are coming back up here. Like I said, a lot of rarefied air. A lot of these stocks that could have problems out here. We were talking about a few, and I said we wanted to get to them before the end of the show. One was Noodles, and the other one was something else, and I'll think about it during the break. Noodles, Noodles, N-O-O-D. NDLS. NDLS. Huge gap down out here. And again, we were talking at the beginning of the show of all these stocks with massive valuations at IPO time that just couldn't happen. We're seeing a lot more of these stocks come back down to probably where these things should have come out. And the idea that these things were all going to be CMG, probably a little bit oversold. I'm trying to remember the other stock. Maybe someone will bring it up in the den. That was another Mexican chain that was supposed to do that. I think the thing's been dead at $25 for a while. Maybe I'll think about that one during the break too. I digress. We'll be back. We'll go through a bunch of stocks before the last 5 minutes of the show.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. I guess I must have missed it. I can't find my clock here. Oh, we are back. Anyway, Noodles and Company, we were looking at this, of course, a IPO that had kind of a big run early on, came out very strong, and has done, after the first couple of days, has pretty much closed lower over the last year. Everybody thinks that Chipotle is going to be the next stock out there, and you still have problems, but of course down on monstrous volume. 1715 is the low from September 5th out here. Probably a pretty good indication this thing is headed to that low sometime soon out here. Trying to remember the other stock from last night that really took it in the chin. I can't remember it right now. We'll look at a few others out here. Wanted to look at KKD. This was one that has come back and is trying to fill this gap. And watching this thing very closely, $21.30 March 13th, and 5.5 million shares. Got into it with basically 840,000 shares the last week. It's kind of been toying around up here, but not pulling back. So you've got to think that it's going to make at least one more run at the highs. Lumber liquidators kind of blew apart back on the August 10th with 10 million shares. It's been trying to come back and fill this gap a few times. Last time on December 31st, $67.86 on 560,000 shares. The last couple of days, 500,000 shares, 560,000 shares. Today, about 270,000 shares. So these things are, maybe they break out, maybe they don't, but probably want to be looking at these fairly closely. What else do we have out here? Sienna. This one kind of interesting. I'm just watching this thing kind of develop over the expiration week. And, of course, this thing's going up against the January 23rd high, $20.32, 3.1 million shares against 1.5 million shares yesterday. A lot of these things are just out here kind of doing the reaction. A lot of them still have high volume lows, like the October 15th low on Sienna. And, if you are wanting to go long, I could understand that. Everybody is talking long. Just make sure your stocks don't have a lot of those high volume lows, and your stocks have volume. And, if you can find a stock with both those things, then they are interesting. If they are not, then they are probably, at least in my view, problematic. There are a few stocks out here that could be making some kind of lows. Jive Software is one, Jive. One of the few out here testing lows on lighter volume. The September 17th spike down got to $5.06 with 880,000 shares. We've gotten below that. We haven't closed back above it, so no buy signal yet. Of course, it came down with pretty heavy volume on the 11th of February. So you could have a lot. But a lot of times these stocks will get down to the level where they can't be shorted. Most brokers will not let you short under $5 stocks. And at that point, a lot of the retail traffic or riffraff that would like to short $5 stocks, which I think is insane, but they do, certainly are probably going to have a tough time. So you get a level of support out here on some of these. You might want to see how this one runs the last couple of days. Anyway, we're going to be on with Tom O'Brien in the 4 o'clock hour. And in the meantime, so when you can, not when you have to. We'll see you Monday, same bat channel, same bat time for the Power Trading Hour. Hang on for Tom O'Brien over most of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.